Hey team, welcome back to the channel. I'm Frank Chou. I'm here to help you live a richer life, and this is an exciting episode for me because this is number 100 since we started the channel going back in September. Thank you for being here. I really appreciate it. You've helped the channel grow so much, and I hope that you stick around for the next 100 videos. In this video, though, we're going to talk about asset classes, and we're going to go deep into that asset. So let's make sure to detonate that like button for the YouTube algorithm, hit that subscribe button so that you don't miss out on future content. And with that being said, let's jump right into it. All right, so let's talk about what is an asset first of all. An asset is some kind of resource that we think is going to provide a future economic benefit to us and that we have some ownership, interest, or control of. So we talk about assets all the time, but when we think about an asset class, this is some grouping of these assets. And these classes are dictated based on how these assets perform, how they are characterized, how they're regulated. So three main asset classes that we often hear about or talk about are equities or stock, bonds or fixed income, as they're often called, and cash and cash equivalents, such as certificates of deposit, things that are highly liquid that you can immediately convert into money that you can spend. So we have those as our main asset classes, but other asset classes include things such as real estate, collectibles, art. There's a lot out there. And so we really want to think about, from a broad perspective, what all of these asset classes are, how they perform, how to assess them, and what we should do when we're trying to decide where we should invest our hard-earned money. To recap the last video in Crypto Chats where we talked about asset classes, there's really two things you want to think about when assessing these: risk and liquidity. When we are assessing any kind of investment, we need to understand what our own personal tolerance for risk is, because certain asset classes are going to be riskier than others. And then liquidity. How quickly would we need to get this money out of our asset and convert it into cash? Some things are highly liquid, like you're checking your savings account, but you have other things such as collectibles, for instance, are highly illiquid. Real estate, same thing, where there's going to be a process that's a bit drawn out to be able to convert that into cash. First, equities. So what is equity? An equity is a share of stock, meaning you have ownership in a piece of a company. So if a company has 20 million shares outstanding and you own one, you own 1/20 millionth of that company. But as such, you do have a portion of ownership, a portion of the value of the company there. When the value of the company goes up, your share of that stock goes up. So you can earn from the appreciation of that stock. If you choose to sell, the value has gone up, and so you have captured some of that growth. The other thing is dividends. So you'll often hear people talk about passive income or dividends. A dividend is when a company is successful and has a profit that they can share with their shareholders. This will be a tiny portion of the profit that will go out to each shareholder. You can sell your equities at any time through your brokerage, right? So if you're using Webull or Robinhood, you can turn around and sell that stock pretty quickly. You need to determine, what risk profile you have within your portfolio of stocks. The liquidity is there for you. Now let's look at bonds. Bonds are kind of the opposite in that when you have stock, you have an ownership portion of the company. When you are a bondholder, you are basically giving debt out to whatever entity. So if you are a government bondholder, you have lent money to the government, whatever government that is, whether it's a municipal government, state, federal, whatever. This bond is giving them a loan, and they agree to pay a certain rate of interest to you, and then you at the end can get your full principal when the bond has reached its maturity. There's corporate bonds too. Corporate bonds are when a company issues debt out to the public markets. You can buy debt and then you become a debt holder. One important thing to keep in mind here is that you want to make sure that you're doing high quality debt. And there's companies that rate corporate debt like Moody's, and you can see what kind of rating a company has, and that reflects their ability to service or repay their debts. They have a fixed rate that they pay out, so that's why it's called fixed income. So you're going to get the same chunk every time until the bond matures. Now, let's talk about cash and cash equivalents. Yes, you can hold cash. You have to be aware that cash will not have the same purchasing power due to inflation, which we've also talked about in a crypto chat. The buying or purchasing power of your cash will decrease over time, which is why we seek to invest, because we want a return greater than the rate of inflation. If you just hold cash in a savings account, the rate of return right now is super low, 0.1, 0.01% on your money on an annual basis. Very low. Holding cash is very low risk because you're just holding it, but because there's low risk, the return is very low. CDs are a little bit less liquid. A certificate of deposit usually has a fixed period where you have to put the money in. If you had to convert it back to cash, you can, but sometimes it comes at a penalty. But they are very secure because it has a fixed rate of interest, and usually it's issued by a bank that's probably FDIC insured, so that your money is protected as well. All right, now let's talk about the things that are a little bit more outside the norm when you're talking about main asset classes. Let's talk real estate. So real estate can be a fantastic investment. You look around YouTube, you're going to see tons of videos on real estate and real estate investing. I own 2 rental properties because I feel that real estate is a high quality investment. One thing I know about real estate is it is never worth zero, ever. Real estate will never be worth zero. A stock can go to zero, a company can go bankrupt, but real estate is never worthless. Everybody has to have a place to live, so it's always going to have some value. It is possible to lose value on real estate. It's possible. We've seen in 2008, 2009 market crash. Yes, you can lose a lot. But remember, you only lose when you sell. So if you have real estate, over time, we expect it to go up. But it also can generate income for you as you have tenants placed in a rental property. You have appreciation. You have someone else paying for your decrease in principal if you have a mortgage. And so there's a lot of benefits there, tax benefits and so on. Real estate is definitely less liquid than many of your other options because it takes so many steps to convert it into cash. You have to get the property cleaned up and ready to list. You have to list it, and you have to do that through a real estate agent in most cases. It's definitely possible to do it on your own, but more challenging. It has to be on the market and shown. You have to do open houses, things like that. And then someone has to make an offer. You have to negotiate, inspection, and on until you can finally close. So great investment class, but not as liquid. The risk profile is, different than what you would expect on fixed income or on equities, but you have to keep in mind that there's so many differences in real estate depending on market, depending on what the economy is doing as a whole, depending on interest rates, government policy. There's so many factors that can influence real estate as well that you should consider. So commodities can range from agriculture to metals. They're not as easy to transact for us as individuals. They require different exchanges, and to be able to transact in commodities requires a little bit of special knowledge, and it's an asset class that as an individual investor you may not necessarily be interested in looking at, with the exception of potentially gold or silver, which can be bought as the asset itself or through an exchange traded fund that's pegged to one of the metals. Cryptocurrencies. We talk about cryptocurrencies a lot. Cryptocurrencies are very liquid, as you can see with the various exchanges. You can quickly transact, you can use them to buy and sell things, but they are highly volatile, so your risk tolerance has to be there. If you're part of the HODL gang, more power to you. it's not something that I would put a high amount of my net worth into. I like to keep it in the 2 to 5% range just because of my own risk tolerance. I like the liquidity, but the volatility does make me a little nervous sometimes. So, small portion of my net worth, but it's still performed well. I'm glad I'm in it. Others, so collectibles such as art, watches. So, if you ever see Kevin O'Leary on his channel, he talks about watches a lot. He has seen a 100% increase in the value of his watch collection just in the last year. So there's great opportunities there, but your market is very limited, and being able to convert those into cash is very difficult. It's a smaller niche, and you've got to be able to find the right person who values that item and wants to buy it. There's plenty of other things that can be considered assets. Other collectibles, whether that's things like comic books, toys, action figures, can be considered assets if they can be resold on eBay. Is probably the source where most people transact these. Pokemon cards. We see a lot of value in there right now, right? That could be the number one performing asset of the year. Who knows? Again, you have a smaller market when you're talking about these more exotic asset classes. And because it has a smaller market, the risk is higher and the liquidity is lower. So just keep that in mind when you are deciding where to put your money. Most people like to stick to the main asset classes. As you venture into more asset classes, as you grow as an investor, there are some big opportunities. I think of all the other asset classes, real estate and cryptocurrencies are the ones with the biggest opportunities. Especially here in the 2020s, we'll see wider spread adoption of cryptocurrency, and we'll see it continue to become more and more normal. Over the last 10 years, we've seen Bitcoin go from the fringes to being more widely accepted to places even like PayPal now. So really great opportunities there in the future. Real estate, so many people have made money on real estate. Whether you look back on like Rockefeller or even Arnold Schwarzenegger, you have had a lot of people make a lot of money in real estate. Remember, as you're looking at these asset classes, determine what, one, your tolerance for risk is, and two, how quickly you think that you will need to convert this asset into cash. If you have a long-term horizon, then great, you can look at things like real estate or cryptocurrencies that might be volatile in the short term but have a high opportunity in the long term. But if you need your money quickly, for example, you're saving for a down payment for a house, you don't want to mess around with things that are going to be highly illiquid or highly volatile. That's when you might consider keeping it into a savings account or a CD. CDs have better rates, and typically if you're saving for a house, you have an idea of a time frame there. So those are good options that are going to keep your money safe, protected. Having those FDIC insured really is another benefit too. Make sure that you do your own assessment and research for what's going to be most appropriate for your situation at a given time. And again, every period of your life is going to see you have a different situation and different considerations, which make some asset classes more or less attractive. We have so many options when we're trying to decide where to invest, and it's interesting to learn about and engage in these different asset classes. Make the decision that's right for you. And the number one decision you can make is to destroy that like button for the YouTube algorithm and hit that subscribe button. I appreciate you being here for the first 100. Thank you so much for being a part of the team, and I will see you next time.